The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Very interesting session we've got here when we make that doji candle in the monthly chart of the Dow. All right, so what we're looking at here, and thank you to John and Steve for a few great hours, and now we've got programming right through until 6 o'clock today, just tremendous amount of information right here at TFN straight after my show. We've got the options hour. You've got Daryl Martin. You've got Dave White. You've got Andy Hecht. And you've got Tom O'Brien. I mean, actually, you've got Tom O'Brien. And then you've got Andy Hecht. So just a full day of information. Dow's up 63 at 17,135. S&P is up 6 at 1984. The comp index right now is up 10 at 45.16. I guess it's lagging, huh? Interesting. Gold was down sharper than this, but it's down 6 at 12.12, and silver is down 37 cents at 17.19. Crude oil is down 135 at 93. That really should be helping the XAL. Let me just use these charts that I've got up here to see where the XAL is. Whoa, whoa, XAL is really taking it on the chin. This is so interesting. Crude oil is dropping like crazy, and the airline index has gone from the 89 level down to where it is right now at between 79 and 80. It's at 80.32. Whoa. Isn't that interesting? So we'll go on, and we're looking at high-grade copper. High-grade copper has, well, it's at 302. At HG, let's look at that. Oh, looks terrible. High-grade copper, you look terrible. Oh, it looks like the H pattern. Right there in the monthly chart, an H goes to an M, and an arch formation in the weekly chart. Oh. That's not spelling good economic conditions around the world if it starts to break into the 29, 28 area. All right, well, let's just do this one at a time. We're going on because bonds are down just a penny. The TLT is down 16 cents at 116.76. Nope, I did read that correctly. And we've got the dollar. Now, this is so interesting. Look, the dollar makes this doji-type candle yesterday, and then today spikes even higher, and the index goes to 86.22. And what are we looking at? We're looking at 86.44 as being the upside target of the 200-period exponential moving average, which it hasn't even come close to since it broke down back in April of 2003, when it broke from 101, went down to 97.30, 97.10 actually, and then every time it's gotten close, it's pulled back, and then it starts to flatten out. And now it is tackling that. And it says to me that there's a good chance that over the coming 2-3 months, we're going to be able to witness how the 200-period moving average right here at 86, the exact number is 86.44, how it either becomes a propellant, repellent, or a magnet line where the price starts hopping around between 86.80, maybe 87, and pulls back and tests 85.44 or 85.40s, and then goes under it, and then comes back to the 85. Oh, this is going to be a very interesting period. Why? EUR/USD, because the euro is making that H to an M pattern, and it is going to test the uptrend support. And if that wedge, a declining wedge formation, well, sort of a declining wedge formation, takes out 1.24 in the next month, that is going to be very poor action. So now let me just explain what I'm looking at here. INDU. What I'm looking at here, and I'm going to expand this, there are two things. I've developed, just oodles and oodles of technical indicators over the years. Almost all of them I discuss openly, and one I discuss openly, but the actual numbers that I use, I keep to myself only because those numbers have changed over the years, and I don't want to give out a number and for people to be looking at it and say, oh my goodness, now it's at this number and it's working when I've started to change that number because the number itself is telling me to change. So far, all I can say is that I got an indication in the Chapman wave methodology yesterday. It's a signal that has a way over 95% accuracy rate, probably over 95%, in that when it signals, it gave the signal just the other day, I think it was on Friday. So what it says is when Richard Arm's short-term trading index goes to certain levels, it used to just be one level that I used, and then I developed this technique of using it on the higher levels instead of the low levels. And that said that if this particular level is hit, there's a good chance that within 2 sessions, and that's the key, the one is immediately the next day, and the other one is within 2 sessions, there should be a reversal from down to up, sharply up, and it should take the S&P futures up between 7 and 9 points. Very often it's pre-market. Sometimes it's after the market opens. There's a sharp pullback. But if that indicator is flashing, and that's what I said to my subscribers this morning to my opening call, that we can expect that there's going to be a close of about, it could be higher intraday because this index particularly affects the E-mini futures, the S&P E-minis. And then it should translate into a move in the cash index higher. And if it does, then the cash index should move about 7 to 9 points higher. Right now it's up 5.73. It was a little higher. And then later there should be some kind of a pullback, and that could be later in the day. And what that would do, now I'm going to get to what the story is all about. It goes to this particular candle right there. What is this candle? This is the Dow monthly candle, very long-term candle, well, very long-term chart, but it's only a monthly candle. And at this particular point, the Dow had opened on the first trading day of September at 17,070. We're trading at 17,126, just slightly higher. It's a monthly chart, remember. But I wouldn't be surprised if we're going to close within, I'd said, within 20 points or 30 points or so higher, maybe a little bit lower. But the fact is that 17,070s would be my target area. Now, when I'm looking at this particular chart, I'm looking at the MACD flattening out but still good. The histogram is still positive, and at this particular point, 988 to 974, yep, that's good. But when I look at the stochastic, it's lower than it was just recently when it went to the high of 17,151 back in July. The MACD, the slow stochastic, had in fact gotten to 94%. And it had even been higher. It had been at 97% in June. And now it's trading down at the 89 to 88% area. So that says to me there's a negative divergence, number one. Number two is this one indicator here, the blue line. This is the unbalanced volume. I'm watching this really closely because that's going to impart a tremendous amount of information for me during the month of October. So I will tell my subscribers what we can expect if we do get this doji close based on 2 months, October and November, action. And there's a certain technique that I use based on the candle formations that I've studied using my own techniques, and we will see if they're going to pan out. Meantime, back at the ranch, let's just make this a little squash this back again. And now we're going to talk about something else. I'd love to take your calls at 877-927-6648. But in the meantime, for my subscribers, we're totally on the short side. We are long. What's so nice about the techniques that you can use today is that you can use the technique of going short by buying the long side of an ETF or an ETN, a note or a financial instrument that has already placed those positions on the short side, and you can buy it in maybe an IRA or Care Plan or whatever it is. And also personally, a lot of people don't like to short. They don't want to be subject to a big gap on the opening or on some day, and they're out of town or something. They come back and they now owe money. They'd rather say, hey, I'd rather lose a little bit than actually have to give back more money. That's the way it is. I know there's X amount of money being spent. I'd rather have that as the amount that I'm able to cushion the blows to the wrong side than to have an unknown on the upside saying you've got to keep paying in. So that's the way it is for many people who like to short. They can use these ETFs. Now, I've also made fairly tight stops. I don't mess around in this business. I don't like to do that. Let's look at the 120-minute chart of the Dow. There's a rectangle formation that's formed between about 16,930s and around about the 17,001, or I'd say 17,140s. And we're real close. We're at 17,133. Still finding some strength. But there's as I say, there's a rectangle formation right here. Now, what's really interesting about this is that the high was made at a peak F top in the Chapman wave in the Dow at 17,350 at 11:30 on the 19th of September. We've come down to a trough E and at a very nice spike. You can always expect some kind of a spike, trough E, a trough F, even a trough G. But that doesn't mean to say that that's the end of the road. But what it does say is, if the rally from that level is met with good technicals, be prepared that you can go higher in the shorter term, and that will impact the next level. In this case, the daily chart. If that was a 120-minute chart, and the daily will impact the weekly chart. Now let's have a greater look. We've just looked in depth at the well, not quite in depth, but we've looked quite closely at the monthly chart. Let's look at the weekly chart of the Dow. Now, this could be the S&P, could be the Dow, it doesn't really matter. I'm suspecting, and it's just a suspicion, I won't know, maybe by Friday we'll know more, but at this particular point, that this is going to be an arch and it's going to become a failure pattern rather than recycling to a brand new leg C in the weekly chart. I think, based on the candle of last week, that especially that Roman candle, based on the MACD almost ready to deflect lower, based on the stochastic holding at 85, which is good, but kind of tilting down. Days young, you never know. But that's kind of what I'm looking at, all right? So I'll make it real simple. If the Dow closes decisively under 17,041, that's the black line, that 9-period exponential moving average, then there's a good chance it's going to try to test the red line, and the red line says that by next week, 16,800 to 16,600 will become a focus if Friday we close very poorly on the weekly chart to give a weekly chart reversal pattern to the downside. Conversely, I'm quite prepared that if the Dow rallies and rallies back towards the 17,190, 17,220 area, I've got to consider that this chart is still strong. Hey, that's the music. 877-976-48. I'd love to take the call. Please call Basil Chapman, Tiger Technicians Hour. I'll be right back after these important messages here at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, Basil Chapman, Tiger Technicians Hour. Dow's up 56, S&P's up 5. Now, I just wanted to add a couple of questions. So let's do this. I'll go questioning one by one. First question I had was, if I get a chance... let me just quickly see this. Where was I? I was at 11 o'clock, so we'll see. Speaking of economic conditions, what do you make of Ford, CLF, and Vail, Basil? Well, first of all, Ford is just such a disappointment to me. What's Ford trading at right now? 14.85. I mean, come on. Everywhere you drive, you see these Ford Fusions and etc. I love the Fusion. I just don't even understand it. It must be Europe, but it must be something else going on. I mean, anyone driving around, you see far fewer Japanese automobiles and far more American automobiles. There's just no question about it. Something's going on. I don't understand it. I don't like it. Ford should be screaming. It should be up in the 20s. So I don't understand. And as to the others, we'll get to the others at some point. But I wanted to go to the next question I had was Facebook. And Facebook is trading right now at 79.47, up 47 cents. So it was a round number, closed yesterday. This is leg D in Facebook daily. It's leg E in the weekly. And this is really fascinating. I'm really upset because we had this. We took profits and I never got back in. I had an opportunity, just didn't do it. I love Facebook. I don't actually go to Facebook, but I love the chart. And now it's just bumping into resistance in this up channel It's called the inside track resistance zone, and it's a rising wedge formation. So it should find resistance between here and maybe 81.20, somewhere around here in the next few days. And most importantly, if this is a doji D, and at any point in the next 2 days, without going higher, we break, instead of going above 70, what was the high today? Today's high was 79.70. You break and you go close under 78.20. 77, 77 will be the really important support level. But so far it's acting very well. And the 120-minute chart is, oops, that's the E-mini is going to leg D. Oh, there it is, leg D. In the 10-minute chart, I showed this during the break. Look, the naked chart, I love this. There is nothing here. It's just candlesticks, right? I could use bars. I'm only counting high peaks and lower troughs. And look what happened. Squeak. It goes, this is the third D that it's made since early this morning. And since 8, that was yesterday. So this is the 10-minute chart, ABCD, and pulls back, and now it's in leg D. So I just wanted to show that the naked chart and the Chapman methodology can give you a tremendous amount of information, and then all the other technical tools are addendums to that. So this is a D in the Facebook, a D in the weekly chart has gone to an E, and an E in the monthly chart, but their monthly chart is still very powerful. Actually, so is the weekly. So it would just be a minor pullback if it pulls back from here. And Facebook picture ads are much more engaging than Google AdWords. Yeah, very good. I've never been to Facebook, so I have no idea. Try to avoid these things. There's just enough going on as it is. So the next question I had was Triple M, 1, 2, 3. Triple M made a peak E-top in the daily chart on the 19th of September at 147.87. It made a rogue wave. I have to call this a rogue wave so far, a peak G in the weekly chart. It could be an alternate count, but for now I'm going to call it, because the MACD, very poor, stochastics is 67%, calling it a rogue wave or right arm extension G in the weekly. Now, this is going to be very important to me and to the longer term, because this has been one of the outstanding winners in the Dow, Triple M, a multinational conglomerate, 3M company. It went to a peak F. I'm wondering if this is a G with a doji candle today. Normally you don't get Gs in monthly charts, but when it's extended so much in one leg, it went from November of 2012 and never made a peak until peak E in December of 2013, a year later, has 12 or 13 candles with higher highs every single month. And then it pulls back, and just 2 months later it turns around, and whoops, it goes back up. And this, I'm calling it, this could have recycled to a C. Just for now, I'm calling it a G. I don't need to call it anything else until I get more evidence of what's going on. But if Triple M breaks at 142.82, up 63 cents today, if it closes in the next week or two without breaking above 145, instead it breaks down and goes under 139, it'll test the bottom of this candle the week of the 8th of August and test the 138.43 level. Wow, Dow's now up 73. This is end of month buying. This kind of fits in with that whole scenario that I was talking about with the Chapman Trent Gate. Very interesting. All right, we'll be back. Basil Chapman, Tiger Technicians Hour. Love to hear from you, 877-927-64. Perfect day for it. There's a lot of things to look at. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Basil Chapman here, and just finishing up a chart. It was the naked chart, the 10-minute chart. If you're using the Nadex platform right now, you'll appreciate just how great the using the Chapman Wave methodology can be. Look, this is GoPro. It goes to peak ABC1, C2, pulls back. Well, first made an E, then it gaps down. Then at 9 on the 29th, it goes from the low of 80, around number 80, and it goes peak ABCD. Doji candles, pulls back, starts a brand new ABCD, and then because of the smoothness of the rally, there's a good chance that the MACD, if you're using the MACD, would be expanding and not pulling back, and it goes all the way to the G, and that's very often what you'll see in the G. I wonder if I can just do this right now. I was asked about GoPro, so let's just use this as a good opportunity to use some of the techniques and explain them. Let's see. So this is the E-mini, but we're going to use this as GoPro. So GPRO, GoPro, of course, is GoPro Inc., Class A shares. Now, look, I had said there's a good chance that you went to the peak G because my eye said that the fast-moving average of the MACD would be expanding, especially when it got to D. And look, that's exactly what happened. And there it is. Then it turns down from that doji candle at the top. So this is going to be very interesting. I've already drawn the pattern that I'm anticipating. It's like an inside buy signal in the Chapman wave after a big, sharp, quick pullback that looks like it's turned a flag pattern from the left side. And that says you could go to a C or even a D, but there should be a turnaround in an arch formation, and then you should come back and test the rising trend line. So we'll see if that's going to work out. Meantime, back at the ranch, I wanted to look at the volatility index. Let's go straight to the VIX, which should be pulling back. Yep, it is. The VIX this morning hit 16.41. You know, these levels are very interesting. Just slowly moving higher. Oh, sorry, that was for Sharpie in the den. I didn't finish. Let me go back to GoPro. I'm sorry. I was so busy with that 10-minute chart. GoPro 120-minute chart, leg E, with a very good chance that that inside wedge that I just drew in the 10-minute chart is going to be fulfilled somehow or other in a kind of a rectangle formation in the 120-minute chart of GoPro. The 100 level is what you'd expect, but very often when they've had such powerful moves, before they get to 100, they do a lot of chopping around between 95 and 96.5, 97. And they can pull back to 93. They could even have a major turn and later on go to 106, to 112. But in the meantime, stocks that go to the 90s, if they go straight up to the 90s becomes really strong resistance. That's what I'm expecting right here. So that's the 120-minute chart says be careful. 88.13 to about 86 would be key support in the next day or two for GoPro if it was to consolidate, and a break to a new recovery high should still turn down within a point or two of the high that we've just made. But it's only leg B. It's only leg B. This is the sexy stock du jour. I mean, there's always one. And we picked it in my opening call, but we didn't get it. We missed it by 30 cents or something. And that's the stock you've got to jump back on board. You get off the horse and you just ride it. That's the way you have to. If you identify it as the stock du jour, you've got to stay with it because the public just loves this kind of stock. This is like Omega, or whatever it was called back in the whatever it was. They just kept going and going and going. They had that one degree of enticement. It just and in this case, it's that taking a video anywhere, anytime. I can just imagine what the library of the GoPro films is. It must be amazing. So I'm looking at this and I'm saying that the MACD is still very strong. Stochastics at 96%. On balance volume and relative strength are saying we're really close to some kind of a pullback. Gee, doesn't that look like... Anybody recognize this chart right here? That's the dollar. So let's see. The GoPro dollar is... let's go back to GoPro. So I don't have a signal yet. If you're long, and I don't know, iOmega, that's what it was called. Thank you, Peaky in the Den. So, Sharpie, if you were long, here's my recommendation. I don't want to change anyone who's in this position, who's had a fantastic run. I would like just to set the stage to say, in terms of money management, the extension that we've just seen, which is way above a 300%, I don't even know what it is, in the Fibonacci extension, to me, this says we are well within a couple of points of having maybe 2 points to the upside from here of the high of today, 96s, but 5 to 6 points on the downside is really possible at this particular level. I'm going to be watching it real closely. I don't think this is a short because it's just too powerful. I believe there will be a time to short it. I'm just saying that with a G/C, I'd rather be comfortable and say I've got a D or something like that. I want to be guessing right now. The 120-minute chart says, yep, be careful. This could, in fact, have made a top today, especially with that in the 10-minute chart. That the look of it says so. Okay, but just take a little bit off. That's all I'm saying. If you're going to do anything, take a little bit off now. You can always put that back. But you've had a fantastic run. Keep your core. Have a trading position and have some fun with it when it can go in the weekly chart to leg C and leg D. And then the monthly will only be maybe in B. Who knows? This is an amazing looking chart. So that's GoPro. We've got John in Philly. John, how are you?
Basil, I'm very well. Thanks for taking the call, sir.
Good. You sound like you're in the Kango Caves back in South Africa.
I'll try to come out of my cave, Basil. Thanks.
Yes.
Would you kindly pull up the S&P 500 cash?
Yes.
I am. First, I have to thank you. I first met you, Basil, back in 2005, and you were the man who shared the tool of tracking markets and trending using a 9-period exponential moving average as a guidepost.
Yes.
Anyway, and that has been so helpful in looking for when markets turn and then keeping with a position as markets trend up or down. So we may have an example of when that is coming into play on the S&P daily charts. Here we have bounced since Thursday's close. Up Friday, dip Monday, bounce back here today. And lo
5
and
days, I
behold,
think. Yep.
Look where the high on the S&P cash is today, 1985. Where is the 9-day EMA, 1985? Question. Do you think odds favor the S&P cash turning over from here? And from a timing perspective, is there anything that you can share about targets for future times that might be targets for tradable turns, either be it a low or actually a high?
Yes, we went through a little bit of this the other day, and I said I really would like to see how Friday's close was. That was this past Friday. I have a time that says the week of the 24th of October, if in fact this Friday the S&P closes below 1978 to 1976-ish, somewhere around that area. In other words, it needs to close not underneath the 9-period moving average in the weekly, but decisively under the 9-period moving average. And that 9-period moving average is at 19, let me double check. I think it says 1982. Yes, at 1982. And as you say, the daily is at 1985. So if I see that, let me just explain a couple of things here. I'm using the Dow a little bit more than the S&P right now, only because that candle is so important in the monthly chart of the Dow. It doesn't happen very often that going to all-time highs, you make a doji high. You might recall, and I don't want to make a comparison with the result. I just want to make a comparison with the effort of making a doji, which means that the price that the Dow opened at that month was almost the same price as what it closed at, especially if it's a small candle. You remember Apple made that tiny little candle at, was it 705? After all that trading, he made this tiny little candle as if it was absolutely, if you were a scientist and you were throwing up a ball and you saw that as it made that curve, that 0% change, where it's not going up, it's not going down, that moment, if you can capture it, it is standing still. There is a moment, even if it is a microsecond, where it is standing still before it turns down. Well, this is the microsecond we'll be looking at in the monthly chart. And if you look at the chart of January, what is that, January? Yes, January, the week of the 3rd of January 2014, this year, there was a doji candle, and then the market took a bit of a breather. But if you look at the candle, have I got it here on this particular one on the weekly chart? 2007. Oh, it was the monthly candle of 2007. Remember that monthly candle of 2007? I'm finding it right here, right there. That was a doji candle. The market opened, the Dow opened at 14,198, and it closed at 14,930. That's within 150 points, and that made a little doji candle right there. So what I'm looking at here is what is going to be the result at 4 o'clock today of this particular candle after a month of trading. And then very specifically what I would do is I would give the parameters to look for, which I'll go through with my subscribers, of what to look for in October and November under certain conditions. Now let's go back to your question. I don't want to avoid the question. I want to go right to the question. And your question was, in the S&P weekly chart, let me open it up here, what would be my parameters? And my parameters would be, if the S&P closes on Friday anywhere about 1994, that shouldn't be a big deal. It's only another 13, 14 points higher. 150 points, the Dow will probably make a new all-time high if it does that. And the S&P gets close to the high that it made just recently of 2019.26. If it closes anywhere on that 9 period, this one here, and let me just tell you exactly what I'm looking at, is a 7-period exponential moving average, which right now is at 1994, yes. So if it closes above 1994 this Thursday, I don't think it's going to, this Friday, I don't think it's going to. But if it did, I would have to say immediately, there is a chance that we could go to a new recovery high. And a lot depends, because you have to have the Dow do the same thing. And if the Dow, in fact, if you're looking at, I'm going to show these charts one after the other. First, here comes the Dow. You'll see that the MACD in the Dow is way stronger than the MACD. This is the moving average, convergence, divergence, and the slow stochastics at 85%. If you look at the S&P weekly, and that's 500 stocks, the S&P, SPX.X, is in fact at 80%, and the MACD is deflected lower. So the S&P 500, and if you don't mind, I want you to put the whole package together so that you can see that I don't like to look at one thing. The New York Stock Exchange, almost 1,860 or 2,000 stocks, has terrible action, and the MACD shows no sign of turning up in the weekly, and the stochastics down at 64%. I suspect that what we're looking at here, SPX, let me go back to the S&P, that if we do close anywhere under that 1974 level, 1976, 1974, preferably 1974, that I could say to you that it will go sideways to down with the up channel and the inside track support level between 1961, it's rising, and 1948. And that's the support that I'm giving it to by the low bars that I've identified. So you can think of it like this, that there's a sub-channel going in right there. Sub-channels always go sideways to down. In this case, if it's a down channel, it'll go with lower highs and lower lows. And it's real simple. And I can make it even easier. A close between 1964, which is the low of this week, would say that not only will you probably test that sooner, this inside track, but there's a very good chance that the doji candle of the week of the 8th of August between 1942 and 1904, that candle was the body of the wick, the body from the upper wick and lower wick between 1926 and 1931, that would then become a target for me. So I'm going one step at a time. First level is in the daily chart. Terrible action, got repelled to the 9-period moving average. MACD is not very good. Stochastics trying to rally. It's an okay rally. It's not great, but there's a lot of resistance between 1985 and 1987 to 1991. So the best case that I can see is that maybe between now and Friday, we'll make some kind of an arch formation and then start to come down, and that could extend the time a little bit to make that area that I've circled. I'd already circled it last week. So I hope that helps you, just in the sense that I can only go one step at a time. And the first step would be if there's a kind of a negative few sessions with Friday closing under 1974 in the S&P. That's the target. If it closes above, you can always test the high. You want to hold, or is that...
No, thanks so much for that thorough review, Basil. I do appreciate it.
Thank you very much, John. Always appreciate hearing from you. We'll be back, folks. Dow's up 42, S&P's up 2.4, and we'll talk about the volatility index.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. So, the oil is down huge, and all I can say is that why is the XAL, the airline index, it's turned around, but it's not participating very well. So let's just do a couple of things here. We've got a few moments before we go to Chad Coco and the options hour with Think or Swim. It's a fabulous show. I really advise you to listen to it if you're interested at all in using options. Now, here we go. So the VIX index, you have to ask the question, even here, at Dow 70,112. What is this? 230 points from its all-time high, and the VIX index is at 15.45 days young, of course, but at 15.45, it is 50% higher than it was at the low of 10.28. I mean, something's going on. People are buying insurance. People who know are buying insurance on that volatility index. I've got this as leg C. It could be, I don't know what it could be, because that's all I can count it at. This is leg C, probably peak C today, but it's really the weekly chart that I'm looking at. Look at those cup formations. I'll show it again. I'm not going to talk about the monthly. We'll wait until the end of the day. Then tomorrow we can talk about the monthly. But look at this. Look at those cup formations. And those cup formations are saying that there is buying pressure, and that buying pressure is taking the VIX index towards the 200-period moving average. It just hit that. 16.91 is the 200-period exponential moving average. It's at 15.43, but it hit 1641 already. No, it hit 17.08. So something's happening here. There are people that are buying insurance, and this insurance is not, it's not cheap insurance, because it's insurance that you know has it. Buying it here, you could lose 60% of your money right there. Whoops, 40%, let's say, if it goes back to 10. So this is insurance that is bought for specific reasons. Now, what's even more important about it, the closer you get to testing the 200-period moving average, the greater the chance of spiking above it. And if it spike above it, all of a sudden the 21s becomes a target. Why? Because that's been the level that it's reversed at 3-4 times already. So that's all I'm looking for. And I think that we are long the volatility index in my opening call, and it's been a fabulous percentage gainer. But that's not the issue. The issue is it is a statement of direction. And if we're wrong, we're wrong. I'm prepared to erase the stop, and we'll just get taken out for maybe a small gain. Or I would like to be able to hold this a while longer. I don't know. It's really difficult. Any other time you held it, you just got creamed. This time, we're hoping that this is going to be the one where a turn has been taken in the market. It isn't being read yet by the price of the the New York Stock Exchange, well, the Dow and the S&P. It is with the New York Stock Exchange, because that exchange is acting, that index is acting very, very poorly. Let's see. Paula says, you deal with the devil, you're going to get burnt. Oh, absolutely, absolutely. Well, we've been very lucky. We've had really tight stops every time we've had it, taking like a 1 or 2% loss, and then we've had some big gains. So we'll see. I mean, right now, it's a huge gain from our entry point on a percentage basis. But, you know, you're absolutely right. You're absolutely right. You've got to understand these vehicles. You've got to know why you're trading them, and you've got to know how. So as I say, in my opening call, we are totally short our positions. I would have liked to have been long some, but they just got away on the upside, and I've just been a little afraid to mix my thinking up at this particular point. Hey, that's the way it is. So, that's the end of the show. I'll be back a little later on with Tom. And, folks, this is a very important time. The close of the market today. Do we get that doji? And then how is that doji dealt with in October and November? Whew, this is going to be fascinating. Have a wonderful rest of the day, and I will see you tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.